What's going on, YouTube? Welcome back to another episode, specifically episode 5 of IMP Trades 360 to 1K. All right, so this is the pre-market review. So here we are on Wednesday. I definitely overslept on Monday and Tuesday, but here we are on Wednesday. We have news in the New York and afternoon session. So no news on London. That's fine. So here we are. So this is the pre-market review. Let's try to get this through quickly. All right, so first things first, I already marked up everything just because it was a lot. It was a thorough analysis, and I'm trying to put in more effort, a good amount on these analysis. All right, so on the monthly, weekly, daily, and 4 hour, we're focusing on what is the higher time frame draw on the higher time frame, of course. Where has the market been? So what's the history? So we can know where we will be next. And that's the main components, and focusing on the power of three, also known as AMD, accumulation, manipulation, distribution. So this month, if you can see my mouse hovering over this candle here, the most recent August, we opened up here, August opening price, and we manipulated down into this order block here, came down to the discount of the order block, which is below 50%. So this is the 50% line we came below into a discount, as well as a discount of this leg up, this push up. So this is 50% of the leg, this is the low, this is the high. 50% came into the discount of the leg, discount of the order block, and we manipulated down in here, filled it, and pushed up. So we seem to be drawing towards what could possibly be last month's high. All right, so that's the basics. When we go into the weekly time frame, you can see this a little bit more in depth. Okay, and just to be simple, here on the weekly time frame, we have a bearish fair value gap. And if we're bullish, right, our bias is currently bullish, and we were to target the next easiest, simplest target, it would be this bearish fair value gap here. Okay, now coming in a little bit closer, you can see where my mouse is hovering here. This is the current weekly candle. Okay, so this is the opening of Monday, August 19th, which is this week. This is the opening of this week's candle. We opened up here, manipulated down just a little bit into last week's candle. Oh shit. Okay, and then we had a push up Monday, Tuesday, and we're currently headed towards this weekly fair value gap. So this weekly candle is also aligning with what we've been saying so far. And not only do we have this weekly fair value gap that we are targeting next as a simple target, simple objective, but we also have the high of, as you can see where my mouse is hovering, this high here is Tuesday, July 23rd high, right? Or also AKA slash buy side liquidity. So we also have this old high from Tuesday, July 23rd, right up under this weekly for value gap. Okay, so now going down to the daily time frame, zoom out a little bit. Inside of that weekly for value gap, and right above that old Tuesday, where my mouse is hovering, Tuesday, July 23rd high, we have a daily bearish for value gap. Okay, and so this is the low of it, this is the high. So this is all just aligning. Okay, now looking a little bit closer at the details, here we have a daily inverse fair value gap. This was a bearish fair value gap. Now we've come into, I know you can't see that middle line, so let me make it thicker right here. Boom. That middle line right there 50% of this daily bearish fair value gap has been inversed, right? So we dug into 50% of it, disrespected it here, closed ever so slightly above. Then the next candle opened above, manipulated. So this was Monday. So Monday, start of the week, we opened here, manipulated below, at, and around the 50% of this daily fair value gap. Included this daily fair value gap also includes this imbalance here. So this gap that we have. So we were including the fair value gap plus the gap. Okay, the inefficiency, I believe so it's called. Okay. And not only that, but we blasted through the 50%, inverse that, and we also came up above this old high on Thursday, August 1st. Um, so the high of the start of the month, we've broken that, came above it, currently maintaining above it. And on Monday, you can't really see it, so let me get in closer. Okay. So this candle here where my mouse is Monday, and the previous candle is Friday. So if you measure the low of Friday to the high, um, let's take this, the low to the high of Friday, you can see that on Monday we opened up, manipulated down, came in to the discount of Friday's leg, right? Or Friday's push. So Friday made this low and this high, and if you take that, split it in half, we came into the discount of that candle, and then we continued to push up. Okay, so now on Tuesday here, we opened up, took Monday's high, so we took yesterday's high, or not yesterday, or yeah, technically speaking, it's still yesterday. It's 11:38 p.m. right now. Okay, we took yesterday's high, and we came down to, we take once again the low of Monday and take the high. We started retracing into or towards 50% or discount of this candle, which there's a reason I had this fib move, but we'll find that out once we go into a lower time frame. But right now, we started retracing into this so Monday's candle, okay? And I'm hoping that we're making this retracement to start setting up for Wednesday's push up, right? To continue to towards this higher time frame draw on liquidity, right? Now, once we go down to the 4 hour, as you can see here, have a little bit more detail, okay? So there's a reason I had these fibs all nice and moved and shit. We'll find out soon. But anyways, so this is last week's Friday, right? Last Friday. Opened up, manipulated down, came up, came into the 50%. So right, so this was Friday's low, and this was okay, this was Friday's high here. Friday's low and Friday's high. Whatever, same shit. Right? Came into 50%. On a lower time frame, you'll see what this is. And then we reject it, continued up. Once okay, and then Monday begins here at this candle. Oh, well on the 4 hour it begins here, right? So we open up, London open, manipulate lower. Once again, 50% of Friday's high and low. Push up. Tuesday opens here on the 4 hour. London open. We open, have some manipulation up, and then we distribute down into this fair value gap here. Okay. So the thing with this here, right, is it would be really nice if we came down into a discount to set up for Wednesday's London session open to then continue to push up. Just like here, Monday London session, we pushed, right? So Monday London session, we were already at and set up for this buy. We were already at the discount of the low and the high, the low and the high here of Friday. So there's the high of Friday, there's the low, right? We came into the discount of that, and we were already set up by the time it was London session for a buy, okay? And we bought up to according to the 4 hour till 2 p.m., right? Um, okay. So let's continue here. So yes, so the possibilities here currently, right before our session, is we could get down to the discount. So if I let's take this Fibonacci here, and let's just play with this on the 4 hour. So if I take this Fibonacci, the Monday, right? So now, and I drag it to Monday's low. So this is the start of Monday on the 4 hour. Take it to how the highest point on Monday, right? From the low to the highest point on Monday, right? Split that in half. Top part is the premium, bottom half is a discount. So if on Tuesday we open up here, manipulate above Monday's high, and we could just distribute to the discount of Monday's like leg, right? The discount of Monday's push. This would be a perfect setup for a buy here at this 4 hour fair value gap, right? That would be perfect. And it just so happens that Friday's London Open is also an order block. So these two consecutive down close candles where we have manipulation before a change in direction is also the opening price for an order block. So if we're looking for buys, it would be nice to see price manipulate down during London or before London to and around this 4 hour fair value gap, which is bullish. I don't know why I have that red. Whoops. This was this. Okay. Come down to this 4 hour bullish fair value gap and respect it, right? It would be okay if it came to this Friday London Open slash order block open. That would be all right. But I just basically the idea is I want to see a hold here, right? So then we can look for our entry. Just because it's here, ready for a buy, potentially doesn't mean that we're gonna buy during London at all, right? But it's going to increase our chances of being correct, and that's what I'm looking for tonight. Okay, going down to the 1 hour. I'm loving this breakdown right now. Loving it. Gotta do more of these, more consistently, right? Good breakdowns. Okay, so let's go back in time once again. This is Friday. Friday London session open. Manipulate down. Start to push up. And notice how, boom, on Friday, right? Friday closes here, right? So on Friday, we open here. New York midnight open price. Not really too important right now. But anyways, we open here. We close at this candle. Okay? So manipulate down. London opens, right? Right here. Manipulate down on Friday. Come back up to the open. Close near the open. Sunday comes. We open up. Okay, couple hours. Push up a little bit. Then boom. Monday opens. Manipulate down. Boom. London opens. Right here. Manipulate a little bit lower into, you can see what it says here, a 15-minute fair value gap, right? which you can't see on the 1 hour. But anyways, 15-minute fair value gap, along with whatever what this says right here, an order block, which you can't see on this time frame, but it's okay. I'll show you soon. So Friday sets up, Friday manipulates down, comes back to the open, and then sets up Monday for a nice retracement into the discount of Friday's low and high. So split it for the high and the low of Friday. Boom. This bottom half is discount. If you're gonna buy, you want to buy at a discounted price here. And it also has a fair value gap along with an order block. So it perfectly sets up Monday for a buy. Manipulate down, hold here. You have one, two, three, four opportunities to enter this trade before it pushes up, right? You had one good opportunity on during London. Sorry, well, yeah, one or two, depending on exactly what time during five. Actually, you had one good opportunity. No, yeah, two. So we just take the 4 hour candle, which I am from now on, and we just make London session from 2 to 6. This is going to count. So we had two opportunities during London and two during New York session, right? Then we just boom take off. Okay. Now we come here to Tuesday. So this is New York midnight open for Tuesday. Open up here, manipulate immediately. Start to manipulate above Monday's high. And before we reach there, so we New York midnight open on Tuesday. Tuesday opening, boom, we open up, start pushing up. Then boom, we hit London open, continue to push up. London finally pushes Tuesday's price to manipulate above Monday's high. Then we immediately, after taking the high, start to push down, push some more. Is probably some that's probably some SMT there potentially. Let's see. Let's not get too fancy here. We'll just very quickly put some candles on and let's see if there's some SMT here. So we took this high here and here we didn't take it. As I assumed, here we have some SMT, some smart money tool. So this just shows manipulation and manipulation with markets that are related. So here on the S&P 500, you can see that the manipulation was a lot clearer. And on NASDAQ or NQ, you can see that the market was a lot weaker. Okay, so this is SMT here, as expected. Okay, showing a lot of weakness, and we just after creating this SMT, see we close here, open up here at 10, immediately just start boom, blasting, pushing down, come back up, touch this order block, push down again, take a high here, push down 50%. Now we're starting to come back up. Okay, so London session could at the beginning we could get a push down into here, and I want to see some buys here because it's almost London. It's about to be 12 now, and we'll have 2 hours until London. We'll just see how everything plays out. But for right now, this is just where my mind is, what I'm thinking. We could potentially before London push here, or during London push here and then continue up, or we could just push here and not even push up during London. That is just how the market is. It doesn't have to do what exactly you're looking for, you know. So, anyways, we're not trying to go too much into the future. So that is just a basic prediction. Okay, you're not trying to fucking guess every fucking fluctuation. That's not how this works. Okay, so let's go back once again. Go back in time. So boom, go from Friday to Monday. Okay, once again, right? So Monday starts right here. where my cursor is at. Monday starts here, immediately start to push down, and here you can see what I was talking about earlier. This 15-minute fair value gap right here. Boom. This order block on the 15 as well starts here. This is where our consecutive candles start to come down. Then we reverse. Boom. Take out this high because three candle pattern makes this high a little bit more significant. Look across. We take that high. We don't have to close above. We take it, making a market structure shift. Boom, as well as create a fair value gap, or you could say a balanced price range because you see we have a gap here, fair value gap here, fair value gap here, and we have another. So we have bearish fair value gap. This on the higher time frame, this is one fair value gap, right? And on this time frame, this is a bullish fair value gap. So this is now a balanced price range. Okay. So now market comes down into the balanced price range, taps where the opening of this order block, right? So this is the opening of an order block here. So let's go ahead and put boom bullish order block. That's what that means. Put that on the right. Boom. So we come back to the opening of this order block as well as hold at this balanced price range. Look at where the candles close. Wicks do the damage, the bodies tell a story. So you see the fair value gap, the balanced price range really stops right here, technically speaking, right? I just marked this up, but this is the true balanced price range. It starts from here, ends right here. You see how the bodies right here are still inside of this balanced price range, okay? But the wicks came and did the damage all the way down to the end of this balanced price range, right to, right to the open of this order block. Okay, then we push up. Boom. This is all Friday. Sunday here. Boom. Then we start Monday. Manipulate down. Boom. Hit London. Manipulate more. Finally, eventually touch here. So this is what could possibly happen today, right? What happened? Like it happened Monday. We open up on Wednesday. So in 7 minutes, open up. Start pushing down towards that 4 hour on the right side, right? That 4 hour fair value gap. Boom. Open London. Start pushing some more. And then we eventually hit at a fair value gap with an order block. Boom. We hold. Okay. And we could either, if we're confident enough, depending on what our 5 minute and 1 minute look like, we enter right here. Or we'll probably wait for, not probably, this is exactly what we're going to do actually. We have a plan. Wait for London, manipulation below, right? So this is what happened here. Boom, London opens, comes above a little bit, but if we're looking for buys, we want to see what manipulation under London open. Boom, manipulate under, tap into this fair value gap, we hold, cool. Where do we enter? We don't enter here, we wait for this. Boom, market structure shift here. So let's go ahead and let's label this, right? Because this is what we'll be actually looking for. We're not fucking coming in clueless. This is what we're looking for. Boom, sell side. Boom, market structure shift. Boom. Then you boom from the bottom of the move to where the market structure shift eventually, so from the bottom of the move to when to the top where the market starts to retrace, right? And it's a significant retracement. And you'll know because, okay, if I pull out my fib early and I'm like, and I see these three little candles here, I'm like, okay, the market's retracing. Boom, and I put my fib here. Well, we then fucking go to discount, so it doesn't even matter, right? So then we make another high. We start retracing here. Okay, all right, cool. Two candles before we make another high. I'm like, okay, that's probably not it. Put my fib here. Eventually, we stop creating a higher high, and we actually retrace to 50%. So cool. At 50%, what do we see? some more smaller internal sell side. We still have our 15-minute fair value gap, and what we boom, get another opportunity here. Cool. And then you buy here, boom, take off. Okay. But this is on the 15-minute. So you can see that you didn't really get an entry on the during London session on the 15-minute. Now if we go down to a lower time frame, let's see what this will look like, right? Let's see. Okay. Scroll over here. I was trying to make this short, but fuck it. It's a good explanation, so we gotta do it. All right. So my logic here is so at 2 a.m. at London Open, a new 4-hour candle opens. So I just try to focus mostly on the manipulation, accumulation, and distribution during this first 4-hour candle. Um, just to see if I could get the move of the day. And then we start moving earlier during London, then obviously that's gonna be really good too. That just means we have a lot of volatility, right? So if the new 4-hour candle starts here at London Open, boom, you see the line right here? Let's bring it back. Nah, we won't bring it back. Fuck it. All right, London Open. Look at my mouse here. Run that across. We're looking for buys, right? London opens. Okay, boom. Come down a little bit. Boom, boom. Manip. We're looking for buys, so we want to see manipulation down, right? So come up. Very strong move down. Manipulation, very clear, right? Very clear. And then here, boom, little high. Boom, higher high. Here, boom. Why here? Because we have very clear one, two, boom, three fucking clear ass candles, as well as you see fair value gap, two fair value gaps here. Same thing. Boom. Another two bearish fair value gaps. Boom. One bullish fair value gap. We have momentum. It's very clear that we have displacement here. We create a fair value gap. Sorry, a balanced price range here. We break this short-term high, right? And we have these consecutive down close candles creating an order block, right? So why not wait here? Well, because as you can fucking see, it's already like fucking, yeah, 5:20. If we were to just go from 2 to 5, like the actual what they say London session is, we wouldn't have even fucking gotten our entry. But since we're focused on the 4-hour candle, because it just happens to coincide with the London Open, the new 4-hour also coincides with the London Open. So this is perfect, right? So then, boom, we get our entry right at the end of that candle, like almost at the close. And it's just after that is perfect, right? So then we go like this. So same thing. So London Open, we're looking for buys, get manipulation down, tap into the 15-minute order block, fair value gap, sorry, aka whatever the fuck, right? Fair value gap, make a short-term high. At the short-term high, we make a market structure shift. I don't know where the fuck that went. Let's put it back. Shit, going on 30 minutes, fuck it. Market structure shift, displacement, aka balanced price range as well. So 5-minute fair value gap, we'll just call it that. Okay, tap in, take our entry, boom, place our stop loss. You could really, if you wanted to hold it for the day, you would place it here, right? And you would go for a daily objective here. All right, so as I was saying, I would enter here, and if I wanted to go for the move of the day, like I really wanted to hold this trade throughout the day, I would place my stop loss under this 15-minute fair value gap, under this low, give it some room, target, first target here, second target would be at either a projection of a standard deviation, right? So if I put my standard deviations, oh, let's put the standard deviations, what the fuck? Where are they? All right, here we go. So if I put out my standard deviations, which, oh shit, okay. Now I figured out why the fuck that was wrong. All right, sorry. Here, they have to go where on this fib, right? No, not this one. My standard deviations have to go here. So I'm loading. So this is the leg, boom, boom. They have to go here, no? No, this isn't right. Yeah, if you want to go for the move of the day, and you're putting it under this low, then your standard deviations would go from this low to this high, projecting up, right? So here we go. Standard deviations, and the final like where the market reaches most of the time and then reverses would be from your two to your from your two to your 2.5. But you can also combine this with an objective, like something logical. So if you go on the 15 minute, as you can see, the market did hit at the uh, standard deviations here, and you would have gone like a 103.39, right? Very easily. That would have gone hit at 230, so that would have been perfect. So that would have been like a move for the day, right? You don't have to like you're not ever most of the time gonna catch the whole piece of the cake. It's not real. You're gonna catch either most of it or some of the move. You just want to get a good chunk, okay? And at 2 p.m., 2:30, I'd say that's pretty good to close, you know. You don't get greedy. I don't like to hold trades past past it. Well, it depends on my objective, but after 4, like that's it, right? That's like the deadline. I'm not entering anything else. I'm not doing anything, right? I'm not managing a trade. I'm not doing nothing. I'm not holding past 4. Okay? Now, that's for the move of the day, right? You could have targeted the standard deviations, place yourself an area here where it usually reverses. Cool. Or targeted the top of this inverse fair value gap, would have gave you a 105. That's realistic too. Is the top of the fair value gap, right? And I'll probably give it that. I'll probably say that's like as far as you would want to take it, right? Anything after that, you're probably getting fucking greedy and you stop, right? So, anyways, going back to the 5 minute, right? Going back to the 5 minute here. If we were to just target something short, a scalp, my stop loss would have been at this low, the most recent previous low here. Targeting, what am I targeting? This high. I'm targeting from this, so the range is from this high, because a lot of times, your target doesn't get filled, right? Like if you were to just target that, you would have gotten stopped out here, right? And I know that, then that's very likely. So what I like to do is look at this high, we have this order block here. So boom, this is where the order block opens, at least on the 5 minute, right? So you put bearish order block, right? Have a fair value gap here as well. So so you'd want to go for the easiest, best target, right? Like combination of both type of thing, right? So you have an order block, you have the high, which is the extreme. You don't want to go for the extreme, you want to go for the easiest. You got the order block open here, you got the fair value gap open here, and right below that you have this high right here, which would be fucking phenomenal. I would have definitely targeted something like this. Okay, so boom here. By the time we get all the way to this high here, my stop loss is already at break even. I'm already running in profit. If I'm targeting here, right, which will give us they want a 2.64 RR, which is not bad, right? Um, I would have already been break even. Here we have a higher low compared to this low. Another higher low, continue push up. I would have probably expected it to come to like 50% here, filling the gap, fucking continue, right? So my stop loss would have been at break even. Probably if this was like really like I wasn't being greedy, this was my objective, like this is my full target, I would have, and we're already up here, taking out this high, right? I would have put my stop loss here. Once that I like to do that, right? So once you're like really close to take profit, a couple points away, like this, you take your stop loss, put it at the last most recent low that the market just made, right? So I would have put it right here. And so we would have gone a 1 to 1.59 RR, which is still a win. And a win is a win, baby. Small wins, small losers, we gotta be good losers. So small losers, small wins, and big wins. And occasionally, if we're being realistic, you'll get some big losses, which by big losses, I mean full SL, which is not really a big loss because it's already a calculated loss that you set in, and you're obviously going for a higher risk to reward than you're obviously winning more than you're losing, right? When you get into a position. So, anyways, we're looking for something like this today. It's already 12. This pre-market analysis is already fucking long as shit. So there's gonna have to be like a whole separate video. But anyways, this is something like this is what we're looking for. Right up over to the right side. Honestly, I do wanna let's push it down one more time frame to the 1 minute, and I wanna see what the 1 minute gives us here. If we could possibly get an even better scalp on the 1 minute. Was there an opportunity for this on Monday? Question mark, question mark. Okay. Look, you see these two lows here? I want to see if there's SMC potential. So here, I think there might be. So here on the NQ, we took out this low. Here, we look like we just matched it. So if we look up here, right? Open, this is the open price. Oh, look, when I hover, it says it open, high, low, and close. So we're looking at the low, which is this one right here, this price. Come to this candle. The low is 5,548.7. This low that, oh, right, that's the low here, 5,548.7. This low that it looks like it might have taken out is 5,548.7. So these are equal lows. So it did not take it out, but it just matched it right there. So here we got the manipulation, very clear. Here we got strength because it held above this high. Not above, but right at it. It held right at it, okay? And the wicks do the damage, the bodies tell the story. So the bodies held above this low, the wicks did the damage. So this was some SMT here. Some other people have strategies to enter just off of SMT, but that is not me. So anyways, we have SMT here, right? And we came down here, okay? So let's take it back a little bit, right? This is London Open, right up over here. London opens, you have to wait quite a while before you get a buying opportunity, right? Boom, hit the 15-minute. This is very clear displacement, or not displacement, but very clear manipulation, right? Because if we're looking for buys, we're not looking for any displacement down, right? So Man, this could have even been a sell, right? So like we could do this today as well. Like, but my only issue is I don't want to go against the higher time frame bias, right? Against the higher time frame drawn liquidity. So this is something that's less likely to play out or less likely to hit because it's against the higher time frame trend. But you can still do it. You just have to know what you're looking for. Here you have a fair value gap, buy side liquidity, manipulation. If you were looking for sales, right? If you're looking for a counter trend, you know that the higher time frame is buying. You know that this would be like the perfect setup to be a buy on the for the higher time frame, and you want to take a position going towards the higher time frame setup. That could work out too. So we have London open, create liquidity above, create more liquidity here, uh, take some of that liquidity, take some more here, do the actual manipulation move, make a shift down, enter here, target um, the higher time frame entry point. Okay, but that's more advanced, I would say, right? It's better if you just focus the higher time frame trend. So if we were to look for an entry on the 1 minute, here we tap into the 15 minute fair value gap. We have a bearish fair value gap here. Eventually we inverse that right over here, close above. We also create another fair value gap here, tap into it. So this could have been tap here, short-term high, this place above the short-term high, create inverse this gap, create another bullish gap, tap in, market structure shift here. So on the smaller time frame, this is a short-term high, which from this high to this low, the market structure shift will basically be right here. So boom, market structure shift here. We pull back, and then you will look for what? We grab the bottom of this leg to where the market starts retracing a decent amount, right? So we just let's take off these deviations. Just go equilibrium. So we're looking for a discounted price, right? It'd be here, around here, right? Let's extend this to the right. Boom. So we start retracing a decent amount here after our market structure shifts. Let's go ahead and mark that off. Okay. Extend this over here, whatever. Boom. Market structure shift here. We start to retrace 50% to the T. Look, the price of the 50% is 19,455.5. The low here is, pay attention top left, right at the L, at the low, 19,455.5. 19,455.5. Look at that. To the T. So we hold here at the discount. Let's take this back. All right, boom. Hold that at the discount. And immediately at this discount, I see what? Fair value gap at or below, right? You want a fair value gap at or below the discounted price. So it's right at, this is the fucking opening, this is the low, the start of this, right? Fair value gap here. Inverse this, market structure here, discounted leg, discount of this push up, and you got the order block open here. Boom. Order block open here. I think I have that. No, I don't. Let's do this. Boom, 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 boom. Order block. Let's save that. Boom, 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 boom. Awesome. Yeah, let's put it to the right. Oh fuck, we said the wrong shit. Sorry, sorry. Very gotta be organized with this, right? Boom. Okay. Save that. Boom, boom. Alright. Order block opens. We even come to the 50% of that order block as well, which is also the 50% of the push-up. Amazing how everything just synchronizes. It must be luck. All right, I would buy here, right at, right here. Buy, right? So I would just take the biggest, actually no. And then you have 50% of this 15 minute for value gap. All right, let's mark it out obviously. Boom. That's a 50% line, halfway point. So you could enter at the halfway push here. At near around the 50%. It doesn't, you're never gonna have a perfect entry. And then you could boom. So you see how this 50% also aligns with the fair value bearish fair value gap that we inversed there. Let me mark the everything aligns. Everything makes sense. That's how you know you're on the right path, right? So yes, this was a bearish fair value gap, so let's make it red. And you can see you even respected the bodies on the higher time frame. These are wicks. But the bodies, boom, perfectly respected even the 50% of this uh inverse fair value gap, the 1 minute inverse fair value gap. 1 minute inverse fair value gap. Boom. So you take an entry here, perfectly aligned with everything. Let's say you didn't get a perfect entry, right? So you fucking got in once this closed. You saw it tapped in, you realized a little bit late, and then boom, it closed, and then you got in there, right? What are you gonna do? So you want to give us some, you want to place your stop loss. Look, look how this aligns. Watch. 1 minute fair value gap, 1 minute inverse fair value gap. The low's right here. You see the box? This is the low of it with my mouse. Also aligns with what? The 50% of the 15-minute bullish fair value gap. You give it some room. Boom. Don't exaggerate too much. Okay? Boom. Look at this. Look at this. Boom. Let's take this off. It's too much shit. All right. This is like the this is the whole leg down right here, bro. Like just fucking free money. Buy side liquidity. And if you were to target on the 1 minute, you could do this because it's the 1 minute. It's very different from the higher time frames. Look at this. Extend to the right. You would have hit a 104.4 RR here at this. And that's not even like, look, if we do the projection, right? So if we grab this leg and do our deviations, standard deviations, that's not even the 2.5 right there. So if you wanted to hold a little bit longer, look at this. Let's see if it reached. That's all right. This is the, okay, it didn't. This is like where it reversed and like, okay, but awesome. This is perfect. Like this, you honestly, I wouldn't even go for anything more than this. Like that's already a 4.4 RR. Okay, so let's back to equilibrium. Anyways, you see how all of this just perfectly aligns? This trade would have taken you. It took 2 hours and 43 minutes to for the setup to happen, and then it took 2 hours and 2 hours and 30 minutes for the setup to finish playing out. Right. So then you would have gone this push up here, back down here. Maybe you get a little bit nervous, but you wait for closes. It closes nice, closes nice, closes nice. Very nice. We didn't get any closes down here, so that it wasn't concerning, right? No reason to close. Boom. Immediately get this aggressive push up. Boom. Here you go. What? Break even. And then you go up a time frame. You're checking, managing, create this 5 minute fair value gap here. Bounce off. Boom. This is the 50%. It's a very thin line. Right? Let's go back here. Boom. Let's make this line thick so you can see. Middle line. Boom. Once again, when price respects the 50% of a fair value gap, that's a very good sign that we're going to continue going in the direction of, wherever the fuck we should be going. Right? So we're respecting 50%. Very sensitive up here at this premium level of the fair value gap. Boom. Continue. This could have even been another entry. Honestly, to be honest with you, I would add here again. Um, so yes. Would I add here again, actually? Would I? Okay. Push up here, break this. I'd probably start measuring. I boom, we got SMT, right? 50%. Look at this. Everything just matches, right? 50%. 50%. Discount, discount. Entry, another entry. If you're winning, add to your winners, bro. Add to your fucking winners. Boom. What are you doing? Same thing. Give it space. 50%. Give it some space. If you really want to be safe, put it at your break even point, right? If you really want to be safe, right? I would probably do this shit. I would probably do something like this. Boom. Same target. Now you have two different entries. One at break even, and you're taking what? You're risking 5% of the account. Risking it here. No risk here anymore. Boom. Risking now 5% here. Net you get so close to take profit, that's all right. You get very close. I would have probably gotten stopped out somewhere right here, right? If I would have moved my stop loss. If I didn't, then you just let full TP hit. But at that point, it doesn't even matter, right? Like, let's say, realistically speaking, we were really safe and we played the game how we should, right? And we're so close to this take profit that we just decide right here, okay, let's move our stop loss right here. We're probably gonna hit TP, right? So you to get taken out right up here, which is fine. That is like not even a problem, right? So let's see how much R's we got. Let's put this back. Okay, let's put this back. Below here, below this, something like this, right? And we're gonna stop out right up over, let's say here. So we ended up taking two winners. One of them, the risk came off, put same amount on, no fucking drawdown. Amazing. Took 1.87 home on one, took 3.55 home on one. Let's calculate. What's that? That is 4.5 point something. 5 point, I don't, let me see. 1.87 plus 3.55. 5.42 RR. One trade, one setup, two trades. How long did this take? From 4:43. Let's do this real quick. 4:43 to like right here, an hour and 35 minutes. An hour and 35 minutes. 5.42 RR. Risking 5% on each trade, mitigating risk, managing risk, having a good objective, having a good stop loss, having good analysis, being patient. You had to wait 2 hours and 43 minutes for this shit. Being patient, seeing the right things. Okay. Manage risk. Hit. Hit. This is golden. On the 1 minute. This was the 1 minute. I showed you the 15-minute entry. That would have been like during New York. I showed you the 5 minute. That still would have been around here. I think, yeah, I think it was like this one or this one, right? On the 5 minute and on the 1 minute, you would have been done within the same, a little bit outside the same fucking session, or not the session because London ends at 5, but the same, a little bit after the 4 hour candle close, the London 4 hour candle close, right? That is fucking amazing. You can't get any better than that. Okay, so that is the pre-market analysis. I know it was long as fuck. I don't apologize because that shit was fucking gas. I'm not gonna lie. But now we wait. Now here we're looking for something similar, right? So I'm not gonna sell. I'm not gonna fucking sell to here. Maybe. Am I lying? I might be. No, I'm not. I'm gonna focus on buys for the rest of the week. I'm not gonna look for any sells. Okay? So if we get the buying opportunity down here, we get it. If we don't, we don't. I'm not tripping. Right? Because you got to think this is a small account. But if we had a $10,000 live account or a prop firm account of 50,000, 100,000, this would pay for like my monthly expenses, right? One of these trades like this. Let's do some hypothetical math right here. Let's get us imagining shit. Okay? So let's say you had a right let's see 5%. So 5% of, let's see, a 100,000 or 150,000 prop firm account, I think allows you to lose 4,500. 5% of that is 225. Let's do times 5.42 RR, right? 225 times 5.42. You would have made $1,219 with 50 cents in a matter of an hour and 35 minutes during a Monday during London session before the fucking sun even rose. So this is about half, maybe some people's monthly salary, maybe one third of some people's monthly salary, right? This is good. To a 2 week pay, maybe 1 week, right? You can't complain. Got right? You gotta focus on the goal, the math, the mindset, the plan. Follow your rules. I'm gonna stop fucking yapping, right? That was a good pre-market analysis. We know what we're looking for. We know what we've done. We know where we are, where we've been, and what we're looking to do. Okay? I hope you guys took value from this. I know you fucking did. This was a good one. Um, Holy shit, we're running like around an hour. That's pretty good. Okay? This is gonna be a whole separate video. I hope you guys got some value from this. Make sure you like, comment, and subscribe, and I'll see you on the next one.